All right, welcome to the ASID Interior Design Billings Index second quarter report web conference. Second quarter report covers April to June of 2017, and we're happy to be presenting the results from the second quarter report. And here with us is myself is Susan Chung, Senior Associate at the Research and Knowledge Management Unit here at ASID. Susan Wiggins, our Senior Strategic Advisor, unfortunately cannot join us today, but we do have with us the great Jack Kleinhans, and I'll let Jack introduce himself.
Well, good morning, everyone, and thank you. Yes, this is Jack Kleinhans, and I serve as a consulting economist to the ASID. And we've been performing a survey for several years, I think going back to approximately 2010. So our survey has some history in terms of interpretation of the data. So let's just start off with the second quarter. So the top line understanding, the economy overall had some bumps early on in the first quarter, and we came in fairly strong in the second quarter. As you can see in the first graph, when we look at the interior design industry, certainly there's been some trend of volatility throughout the last 12 months. Not surprising, given how different factors influence the industry. There has been some gains and then followed by some steps backwards. But you notice the blue dashed line is the actual monthly data, the monthly index for the IDBEI. The second quarter index for June was 58.8, slightly down from the 62.8 that was registered in March. And again, volatility is pretty much accepted in the environment. So kind of looking through and squinting and using the 3-month moving average, you can see that the industry in the first half of the year has been on a good tilt forward and upward. We've seen a similar pattern for inquiries. The red dash line is the response for the monthly survey. For the survey, they asked, how were potential clients vis-a-vis inquiries, and that's also been in a good stratosphere on this graph. So all in all, I think it suggests that the quarter has been okay. Obviously, we've had a little pullback in one of the months, but that shouldn't suggest that that will remain throughout the rest of the year. So on the next slide, we have how did the responses change vis-a-vis different size of firms. And so if we would go to the next slide. Thank you. You can see, again, a lot of volatility based on size of firms. It's one of those industries that really are project oriented, and projects come and go, and they're not always in on a nice, even, smooth trajectory. But all size firms enjoyed positive billings in the second quarter, even though we're seeing some, again, these the peaks and valleys. But all of the size firms were above 50 for the last quarter. Again, a number of 50 or above suggests expansion and gains in revenue. If you tried to, put a trend line for each one of these different size firms, I'm pretty much sure that it would be pointing upward in a growth manner. So we'll go to our next slide, which gives us some understanding of regional effects in terms of the survey. And as you can see, design firms across the Midwest, the Northeast, and the West slowed a bit in June, but overall, above 50 for the last 3 months. You might note, though, that the South certainly showed much more consistent strength, and it's been that way since the early part of 2017. Again, as a reminder, if you're an index the way we've constructed it, an index score of 50 or above indicates positive performance. On our next slide, we'll try to kind of relate some of our findings to the actual spending, and in particular spending on furniture and durable goods relative to our index. You can see that, it's another erratic kind of trend of activity. We believe that the index does a fair job of suggesting how spending should be going forward in time, especially in furniture and durable goods. And the index is showing an upward tilt, as you can see the red line, and of course it was mirrored with the green line. Now, spending in the second quarter from the GDP data on consumer spending on furniture and durable goods actually showed a little slower than what we saw back a year ago or even 2 years ago. I think there's this movement, though, away from goods spending and more towards services spending that we've been seeing in some of the other data, especially in retail sales. Consumer is still spending, but nonetheless, they're not spending as much on goods, and that would show up here. Now, I just also point out that furniture and durable goods in particular have been suffering from significant price deflation. And so in terms of how much is being spent, might not indicate demand per se. It might be showing that there is actually volume, but at a lower price, and people could actually buy more. One other last comment with regard to this graph is that there has been a little bit of a slowdown in borrowing, in the use of credit in the last couple of months. It was actually up in the previous month, but down in the most current month. So there has been some hesitancy, some reluctancy by consumers to use credit, and so obviously that would be where they would probably use it, and certainly some type of furnishings and furniture. So my next slide in this group of analyses looks at the future, and the blue line, which is our ASID index that asks our panelists, well, how do you see the next 6 months in terms of business conditions? And, it's looking fairly consistent, continually seeing a score of better than 50. It has trended in the mid-60s range for some time. I think that shows sort of the optimism that I think people are registering in terms of revenue. The Conference Board puts out the Consumer Confidence Index every month. A sub-index of that is the Expectations Index. One is current, one's expectations. What we've graphed here is the Conference Board's Expectations Index. And you can see that there's a little bit of a backsliding that occurred since March. That might be related to some of the sort of the political media activities, reports about how the economy and how different policies may or may not be undertaken. But we know that turned up actually in July. So if there's any forward thinking here about the future, the index, the consumer confidence index did turn back up. So the final index here, so the Consumer Confidence Index kind of gives me some indication about sort of retail related spending in the industry. And then now let's look at the Dodge Momentum Index. That gives me some indication on how commercial and institutional spending might occur. And as you can see from that survey, there's been some substantial strength. We're seeing, in general, spending is occurring. and in this area, this construction area, albeit it's been subject to certainly some uncertainties overall. Again, since the Great Recession, but one of the strengths that we do see, though, is that residential spending has continued to move forward, and probably, in my view, to continue through the rest of 2017. And with that, I will turn over the conference call to my colleague, Susan.
All right, thank you, Jack. For ASID, the Research and Knowledge Management Unit really looks to not just the business of design, but also looking at the impact of design, the practice of design, and also leadership development. In looking at all those 4 categories, we really turn to our IDBI panelists in gathering more insights to this as we gather the data for the IDBI. And one opportunity that we have is to ask a couple of bonus questions alongside the monthly performance surveys that we send out to our panelists. For this second quarter, we wanted to kind of understand further the business performance and really not just compare the 2017 outlook with the 2016 performance, but also kind of get a sense of how businesses are doing. For one of the bonus questions asked was, over the first 6 months of 2017, how has your business performed relative to your expectations? With this, our panelists have been pretty positive. The majority responding that it has met their expectation, 34% saying that it was better than expected, but we still have about 20% that says that it was worse than expected. When actually getting into more of the details of it and looking at the comments that our panelists have left us, we found that those who responded that it was better than expected, it was due to unexpected repeat clients. So those who didn't even have an inquiry, but because of their past experience, repeated and came to them for business. But then there are also a lot more inquiries that were signed. So not something that you can actually predict when you're getting those inquiries and to see whether those lead into actual projects or not. But those who have been doing well in the first 6 months of 2017 have definitely getting that traction in their business. Whereas for those who reported that the first 6 months was worse than expected, went because some of the projects fell through, some of the projects were pushed back by construction. So in that particular example or quote, they do expect that to pick up in the latter half of 2017. So it might not show in the first half, but it's definitely a project that they are continuing to pursue. There was also a comment with less interest, but again, all of these outlook components, there's many factors that get into it, with size of firm and the region, as Jack had reviewed with us, but also just really understanding the clients and the inquiries. And a lot of this is due to uncontrollable factors that cannot be predicted, but it's great to see that we're still seeing a lot of positive connotations towards the industry and in the projects that our panelists are receiving. So overall, very positive, very good. In the next slide, what we see here is, again, to kind of expand on that in comparing the first half of 2017 and looking beyond that. So for the second half of 2017, what they expect, which would be that red bar comparing the first half of 2017 and the second half, whereas the blue bar is comparing 2017 to 2016. I think an interesting note to take from this graph is showing that the blue bar, so comparing 2017 to 2016, it's almost a normal distribution with that bell curve, with the increase of 1%, 20 to 24% to be the highest, and then kind of spread regularly distributed throughout. Whereas if you get into the red bar, you'll notice that a lot more is positive in that sense, and we definitely see a larger proportion of our panelists expecting at least an increase of 1% to 24% for the second half. So we do think that from this, although in the beginning of the year, the outlook was relatively positive, now that our panelists have gone through a half of 2017, they are more confident in their business and are seeing that the positive growth will continue to the second half as well. So on similar lines, on the next slide, we had asked on hiring questions, and this question had asked in the second quarter, have you already hired or do you expect to hire additional employees in 2017? Among the respondents, 30% had said yes, which is pretty positive. Among those 30% who responded yes, 54% were from the South. So definitely we're seeing more business happening in the South, more hiring activity in that region. If we get into the years of experience, the majority of those hired or expected to hire is early careerists and mid-careerists, so 0 to 4 years or 5 to 10 years of experience. We definitely see that across the industry, and we'll say that the firms that responded yes are firms in all revenue categories, but more pronounced in larger firms. So 46% of firms with revenue of 1 million and above had responded that they are looking to hire or have already hired. Based on some of the research that we've done here at ASID, and produced a report called Career Plus, which is our Emerging Professional Roundtable report, we've definitely seen that a lot of early to mid-careerists have been looking to gather more experience. And that's not just in years of experience, but kind of broadening their experience to other firms as well, trying to find the right fit for them, trying to expand their knowledge and practice in the field. So we do see this response to go alongside with what we've found in that Career Plus document. And for practitioners, this is great because firms are looking to hire, especially firms with those, for practitioners with this experience. But on the flip side, for firms, it is a crucial time to look into recruitment and retention. So for those who are looking to hire, really getting into what their competitive edge and what they can offer to hire the talent that they want. And also for those who want to keep their talent, it's about retaining that talent, making sure that they're in line with the practitioners, their employees, making sure that they're responding to their needs and have flexibility in the organization. We have a subset of this question. We've asked how difficult it was for firms to find talent that they want, need, and we've seen that most of the respondents have said that was very difficult. So we're continuing to see that struggle to hire the best talent out there. But all of this we're seeing to be very healthy for the industry, seeing positive outlooks, seeing hiring activity, seeing more competitiveness with those who have the experience. So for practitioners, it's an encouragement to continue with professional development, professional growth. For organizations, it's again a challenge to really hold on to your best talent and see what support you can provide to those who are looking to grow. So I think overall, this second quarter has revealed a lot of positive attributes to the interior design industry, and really looking forward to the next half of 2017. All right. This concludes what we've prepared for this web conference. We're happy to take any questions if you have any, and that could be either through the webinar platform, or if you do have additional questions that you think of afterwards, feel free to reach out to our marketing and communications team, and we will be able to respond afterwards. As we wait for any questions to come in, Jack, any further comments?
Well, I think that you did a nice job of kind of giving a good perspective of how the industry is trying to staff adequately its needs. It's a challenging time for some companies to find qualified talent, and that has to also be balanced against, the expectations of business coming in, especially in this industry. I think as we think further about 2017, we probably will see, some more of the same in the economy. We have reported, good consumer spending for the second quarter. A lot depends on the consumer, whether they're buying groceries or whether they're buying furniture or whether they're buying services, such as professional services from an interior designer. So, I look at the data and suggest that, it's more of the same going forward. I don't think we're going to track too much faster than approximately trend growth 2% in the economy. So I'm hopeful that we'll get some resolution in the next few months, especially on public policies that seem to just sit out there and kind of have a way of sort of staying on our shoulder and giving us a headache. So we'll have to see. But overall, I think business conditions from the survey continue to suggest a healthy environment throughout the rest of the year.
Mm-hmm. Great. We did receive a question. And this question is, uncertainty was mentioned a lot during the webinar. Are there any macro trends that we should worry about or welcome? I will.
So I think the question was, is there macro trends that may impact the industry? And I guess there probably are a couple of things to think about. Certainly, we've had some mixed news on housing, on home sales, and there's a high correlation with spending related to new and even existing home sales, and so consequently, from that standpoint, there could be some softening in terms of demand. The other issue has been that there has been some easing, on the other hand, for lending standards for residential mortgages, which again creates potential and people borrow to do home improvement. On the other hand, there has been some reluctance on use of credit for consumers. I think, again, a delicate balance. And as we go forward in time, I think that the general direction of the economy remains positive because employment gains have been fairly strong. Again, even though it's been lackluster spending in some regards, and if there is expenditures, it's mostly for services. But in general, other areas of importance certainly would be how manufacturing is performing. And, most recently, the Institute of Supply Management showed a drop. But again, it's up and down, but nonetheless, we're still a reading of more than 50, just like the IDBI index. So, I mean, nothing kind of is standing out in front of me indicating some major red light or even a yellow light. It's been referred to as certainly a kind of a Goldilocks phenomenon, not too hot and not too cold. We're just kind of moving right along. And I think the important thing is the consumer needs to continue to be the driver as expected, because it represents 70% of the economy. As long as they have confidence and there's jobs, I think they will spend. And I think that, that will be what we see for the rest of this year. Again, hard to tell what kind of policy implications might be coming out of Washington. There's been a lot of discussions about tax policy at this point in time. Certainly any way that consumers would gain more spending power would be a good thing, and probably a good thing for the interior design industry.
I think I would add to that just the change that's happening, not just in the economy, but even in the interior design industry and the practice. In our 2016-2017 State of the Industry and Outlook report, we kind of focused on the topic of change and saying that there are so many factors that are influencing or impacting the interior design profession, and one being that the business has changed, or the practice has changed. We're seeing a lot of online businesses, online firms, design services have changed somewhat in nature as well. So consumers are really exposed to a variety of ways to receive their interior design services. So on that part, it's really just that uncertainty of how this change will evolve, because we really, can't see into the future, but just understanding what's going on right now, and then just preparing yourself that one thing that is evident is that there will be change. Don't know what that change will be, but there will be change nonetheless. So it's just being prepared. It gets into being resilient with any of the changes that arise in the industry as well. So I think from more of the practice side of it, that's one thing that we here at ASID is looking at. So hopefully that has provided you insight with what's going on with the economy and the business of interior design during the second quarter of 2017. We look forward to continually release our monthly reports on our ASID website, and then also see you again for the next quarter. That should be around November, when we release the third quarter results of the ASID Interior Design Billings Index. So thank you again for joining us, and we look forward to seeing you again. Thank you.